Okay, hi there, Jeff back again with another Synoptic video. Let's look at the micro and macro aspects that might be linked to trade liberalisation. Here's the context. I'm going to take the example of a trade deal long in the discussion between the United Arab Emirates, UAE, and India. They signed a free trade deal in the early months of 2022. Optimistic, expected to double bilateral non-oil trade to 100 billion. That's, of course, UAE, of course, a major oil exporter. And the UAE is deepening its economic partnership with the second largest trade partner, India. UAE expects the deal to add $10 billion or 1.7% to their GDP by 2030. And it's also a deal that involves the free movement of labour. I think there's going to be another 140,000 skilled jobs into the workforce over the same time frame. UAE is eliminating import tariffs on key commodities such as aluminium, copper, steel and petrochemicals, etc. And about 80% of products, goods and services will have tariffs removed. So quite an important trade deal. What about three micro consequences? So when you think about a trade deal, trade liberalisation, of course, is a very important sort of macroeconomic, market-based approach to growth and development. So a trade deal, this is a bilateral trade deal between two countries. On the micro side, you could think about the impact on costs for firms in the UAE. Let's just highlight that. So whenever you're talking here about cost of businesses, that's micro. Use a specific example. So the scrapping of import tariffs on aluminium, on copper and steel. In theory, that is going to bring down the costs of imported products, and you could well use a cost and revenue curve analysis to show the possible impact on prices and profits. So, for example, UAE, huge amount of construction taking place, as you know, fast-growing country. And if you reduce import tariffs on Indian steel, think about the consequences for UAE construction companies or UAE businesses that are using steel in different projects in the Emirate. You could also, at a micro level, it's up to you what you want to choose, you could take the labour market. So you could talk about the impact on the labour market, in particular, the idea that this steel is going to increase the number of skilled migrants coming in. 140,000 in the context of their population looks pretty significant to me. That could help alleviate skills shortages and perhaps bring down wage inflation, impact on unit labour costs. So again, you could link that to firms. So in fact, you could build quite a strong KAA point. You only need one KAA paragraph talking about the fact that the trade deal, both free trade in physical products like copper and steel and labour, could both help to bring down the costs of UAE firms. You could put one and two together to build quite a chunky and impressive KA paragraph. Or you could look about the impact on households. Don't forget, if you're looking at the impact on individual consumers, that is also micro. In theory, of course, tariffs bring prices down. You could use a diagram to show that, which increases consumer surplus and higher real incomes. To get the application, though, you'd have to think about the consequences for particular consumers. So consumers buying property, for example, or consumers who are, if there's a fall in the tariff on aluminium, that brings down the cost of cans and products used in food processing, for example. What about the macro side? Lots you can write about. Whenever you talk about the macro side, of course, you're going back to your macro objectives. So the trade deal is designed to stimulate exports, of course. The idea of comparative advantage is crucial there. So stimulating exports and perhaps giving UAE exporters improved access to Indian markets. A huge economy. So perhaps there's opportunities there for UAE exporters, particularly where per capita income is rising. That's quite important. So Indian economy, of course, per capita income is being lifted, more people moving out of poverty, and there's a possible export multiplier effect from a rise in UAE exports. So you could certainly use ADS analysis to show that. The influx of skilled workers, of course, can have an effect on their labour force, could increase long and aggregate supply, and also the ability to import capital technology from India could be a long-run supply effect. On the other hand, there could be possible effects on unemployment, particularly if UAE producers can't compete on a cost basis against Indian production. So that could cause maybe a fall in domestic production, which could lead them to a fall in revenues and profits. Either way, on the macro side, whenever you're talking about key macro objectives, trade, growth, prices, jobs, export potential output, that is what you're talking about. Remember, in the final reason judgment, consider which is the most significant impact, micro or macro, and why. What do you think so? Well, my instinct is at a micro level, you probably get more of a short-term effect. Consumers in the UAE is going to see significant short-term benefits. Their sportswear, their textiles will become cheaper. Their pharmaceuticals could well become cheaper. India has a comparative advantage in making vaccines and other pharmaceutical products. So perhaps you may argue that at a micro level in the short term, the effect is going to be quite significant, increasing real incomes of people living in the UAE. At the macro level, perhaps the gains from trade appear to be quite sizable. If you think about what the UAE has an advantage in contrasting with India, there's not a lot of crossover. So perhaps there are some clear comparative advantage gains, but also the risk of structural unemployment from sectors who suffer from an increase in relatively cheaper imports. I think in the long term, at a macro level, it's not just about trade, it's about investment. So you could say, for example, the macro effects perhaps more significant in the long term, particularly if this trade deal is amplified by the flow of FDI between countries. There's already some examples, I think, of UAE companies with expertise in renewables forming partnerships and joint ventures with Indian companies to accelerate the Indian progress towards clean energy technologies. So perhaps in the longer term, there could be a stronger macroeconomic effect, particularly on long and aggregate supply. Either way, you've got to make a call on this. The key is to think synoptically, to write synoptically, and to come to a reasoned, justified judgment at the end. There we go. That was a quick video looking at the synoptic effects of trade liberalisation. Hopefully it was useful. If it was, please press the like button and stay happy, stay positive. See you soon.